Hello everyone, welcome to my channel. Today I'm going to talk about why your business books are a mess. If you are a business owner who dreads looking at your financial records, you are not alone. Many entrepreneurs start their business with a passion for their product or service, but quickly discover that bookkeeping is one of the most challenging parts of running a company. Over time, receipts pile up, transactions go uncategorized, bank accounts do not reconcile, and financial reports become unreliable. Messy books are more common than you might think. In fact, many small business owners operate for months or even years without realizing how disorganized their finances has become. The good news is that understanding why your books are a mess is the first step towards fixing them. You are too busy running the business. One of the biggest reasons business books become disorganized is simple: you are busy. As a business owner, you are likely handling sales, customer service, marketing, operations, hiring, and countless other responsibilities. Bookkeeping often falls to the bottom of the priority list because it does not seem urgent compared to serving customers or generating revenue. Unfortunately, bookkeeping is one of those tasks that becomes more difficult the longer it's ignored. A few missed transactions can quickly turn into months of unfinished records. When bookkeeping becomes an afterthought, financial confusion often follows. You are mixing personal and business expenses. One of the most common bookkeeping mistakes is combining personal and business transactions. Many small business owners use personal credit cards, personal bank accounts, or cash for business purposes. While this may seem convenient at first, it creates significant challenges when it's time to review financial records. Mixed transactions make it difficult to track business expenses, calculate profits accurately, prepare tax returns, identify deductible expenses, maintain clean financial records. Separating business and personal finances is one of the fastest ways to improve bookkeeping accuracy. You are not recording transactions regularly. Bookkeeping is most effective when it's done consistently. Many business owners wait until the end of the month, quarter, or even year to organize their finances. By that point, transactions are harder to remember, receipts may be missing, and mistakes become more likely. Bookkeeping should be treated as an ongoing process rather than a once a year project. Regular bookkeeping helps ensure that financial information remains accurate and up to date. You are not reconciling your accounts. Bank reconciliation is one of the most important bookkeeping tasks. Reconciling means comparing your accounting records to your bank and credit card statements to ensure everything matches. Without reconciliation, your books may contain duplicate transactions, missing transactions, incorrect balances, unrecorded fees, data entry errors. Many business owners assume their accounting software is automatically accurate, but mistakes can happen. Regular reconciliations help catch errors before they become larger problems. You are not using a bookkeeping system. Some businesses attempt to manage finances using spreadsheets, notebooks, or incomplete record keeping systems. While these methods may work temporarily, they often become difficult to manage as a business grows. A proper bookkeeping system helps organize income, expenses, assets, liabilities, payroll, financial reports. Without a structured system, financial records can quickly become inconsistent and unreliable. Investing in the right tools often saves significant time and frustration later. You do not understand financial categories. Many bookkeeping issues stem from incorrect transaction categorizations. Business owners often struggle to determine whether expenses belong in categories such as advertising, office supplies, equipment, travel, meals, professional services. Incorrect categorization can lead to inaccurate financial reports and tax filing issues. If expenses are not properly classified, business owners may struggle to understand where money is actually being spent. Accurate categorization provides valuable insight into business performance. You are saving receipts everywhere. Receipts are essential for maintaining accurate records and supporting tax documents. However, many business owners store receipts in multiple locations: glove compartments, desk drawers, email inboxes, wallets, boxes, mobile phones. When receipts are scattered everywhere, important documentation often gets lost. A centralized system for storing receipts can dramatically improve organization and reduce stress during tax season. You are ignoring financial reports. Some business owners avoid looking at financial reports because they find them confusing or intimidating. Unfortunately, avoiding reports often leads to bigger problems. Key reports such as profit and loss statements, balance sheets, cash flow statements provide valuable information about business performance. Without reviewing these reports regularly, business owners may miss warning signs related to profitability, cash flow, or excessive spending. Financial reports are not just accounting documents, they are decision making tools. Tax season become a fire drill. Many businesses discover bookkeeping problems only when tax season arrives. Suddenly, an accountant begins requesting bank statements, expense records, income records, receipts, financial statements. When bookkeeping has been neglected throughout the year, gathering this information becomes overwhelming. Business owners often spend countless hours trying to reconstruct financial records under tight deadlines. Maintaining organized books year round makes tax preparation significantly easier and less stressful. Lack of financial process. Businesses often become disorganized because they lack repeatable financial procedures. Questions such as this should have clear answers. Who records transactions? How often are accounts reconciled? Where are receipts stored? When are financial reports reviewed? How are expenses approved? Without established processes, bookkeeping becomes inconsistent and errors become more common. Good system creates consistency and accountability. The cost of messy books. Messy bookkeeping affects more than just accounting records. Disorganized books can lead to missed tax deductions, cash flow problems, poor business decisions, tax filing errors, increased accountant fees, financial stress, difficulty obtaining loans. Perhaps most importantly, messy books prevent business owners from fully understanding their financial position. You cannot effectively manage what you cannot accurately measure. How to get your books back on track. The good news is that messy books can be fixed. Start by separating personal and business finances, recording transactions consistently, reconciling accounts monthly, organizing receipts digitally, reviewing financial reports regularly, using accounting software, working with a professional bookkeeper when needed. Small improvement made consistently can transform your financial records over time. In conclusion, if your business books are a mess, you're not alone. Many entrepreneurs struggle with bookkeeping because they are focused on growing their businesses rather than managing financial records. However, ignoring bookkeeping often creates bigger challenges down the road. Clean books provide clarity, confidence, and control. They help you understand your business, make better financial decisions, reduce tax time stress, and position your company for long term success. The sooner you address bookkeeping problems, the easier they are to fix. Your financial records should work for your business, not against it. Thanks for watching this video and do not forget to subscribe to my channel.